All right, guys. Without further ado, I would like to welcome to the stage Dr. Hui Liu. I hope I'm saying this right. He's going to give a talk about how to build a trading bot or a trading robot from idea to trading quickly. He's also the person behind iBridgePy, which is one of the coolest solutions to connect to interactive brokers and many other brokers now. So I'd like to welcome to stage. Hello, hello.
Hello,
Welcome on board.
Ren. You can hear me, right?
Yeah, we can hear you perfectly. I am going to, as always, give you the stage. Uh, Best of luck. Cheers.
Thank you very much, Ren, for the introduction. And I'm really lucky to find your company and this summit. And thank you very much. I'm really excited to know that. And let me switch to my presentation, and hopefully everyone can see it clearly. Today, my talk is about how to convert a trading idea to a trading robot quickly. That's what I'm trying to focus on, actually. And I live in Silicon Valley in California, United States. And let me start my presentation. So here's the content of my talk. And I'm going to talk about these 6 steps to convert trading ideas to a live trading. First, we need to come up a trading idea. I will use Jupyter Notebook to talk about a strategy that I call it buy low and sell high. Then I will collect historical data using Y Finance package, which was developed by Ren actually. And then I will use the historical data to build a very simple machine learning model, which is a linear regression. After that, we can either prove or disprove the trading idea. If you feel the trading idea is profitable, we can create a trading robot using iBridgePy. And then the next step before live trade is to backtest your strategy. The goals of backtest is either you need to remove the coding bugs, the other is to further confirm the trading idea is profitable. Then after you have trading robots, we can turn into live trading. And then that's the ultimate goal. So first, come up trading idea. Here, I use SPY, which is the ETF to tracking SP 500 index. This is an ETF so that you can trade it. And I open the Yahoo Finance historical data. If we check out the overall historical data, we can find out the price go up until another trend form, then go down, up, down, and go up. Right now, we are in a upward trending right now. So based on this long-term chart, we can say SPY is a pretty good trend. And however, if we zoom in into individual daily bar data, we can see some typical pattern looks like this. And some patterns we can easily recognize is something like this. It's a swing pattern in short term, which is a daily pattern. For example, price drop and then go up again. Go up and go down. After go down and go up again. So pattern form here. For example, here, price drop and go up. Price drop, go up. Drop, go up. Drop, go up. Drop, go up. So based on this observation, I come up a trading idea, which is buy low and sell high. I use it as a demo here, but actually you can come up a lot of trading ideas based on the fundamental analysis or quantitative analysis, or either based on your personal trading experience or your observation or some ideas from friends. Here I just use this trading ideas as an example, so to demo how to convert these trading ideas to a trading robot. The next step is to collect historical data, build model to either prove or disprove this idea. Collect historical data is relatively easy because most of the brokers have historical data for you. And the Yahoo Finance is a pretty good data source you can use. And there are other third-party data providers. So you need to get familiar with their API and download their data for your backtesting. The next step is to build a simple machine learning model. Here, I will do the following 5 steps. Then I will open the Jupyter Notebook to give you a real demo. The 5th step is first, retrieve historical data. I will use Yahoo Finance. Then I will prepare the historical data by adding a few columns so that the data can be used to run a linear regression model. Then I will build a model using very popular machine learning Python package. After that, to help you visualize, I will draw some chart to help you to identify either trend or some correlation. Then I will use the function to make a stock screener. So you can use it, actually the demo code. I will use IBridgePy to do this demo so that I will give a very brief introduction about IBridgePy. IBridgePy is an easy to use Python platform to backtest and live trade with different brokers, for example, Interactive Brokers or TD Ameritrade. The top reason I developed IBridgePy many years ago was the privacy issue. I mean, what I want to do is I have a package that runs in my computer instead of the web-based browser. And I have 100% control of my intellectual property. That's why I developed IBridgePy. IBridgePy is a Python package you can download from website and install it in your computer. Actually, just unzip, it's good enough. If you want to trade with Interactive Brokers, you need to download IB's TWS or IB Gateway. Then it will communicate with the broker and everything is under your control. So you can run IBridgePy either in your local computer or in a cloud. Anyway, it's 100% privacy. IBridgePy can manage multiple accounts at the same time. Also, it can backtest using any data provider and live trade. Just very brief introduction. After this one, let me switch to the Jupyter Notebook to give you a real-time demo. It's not very long. I will just run block one by one and give you a quick introduction about what's going on there. The first block is just to import a few libraries. Then I use a function to create IBridgePy plus object, which is called T. So that I will use T in the following. Then the next function I'm going to use is to request historical data. Use this function. Here, I want to request SPY, daily bar. I want to go back 8,000 days. It's just an arbitrary number I come up so that I can get enough data from Yahoo Finance. The data provider name is Yahoo Finance. So literally, it will just go to Yahoo Finance. The return of this function is a pandas data frame. I call it hist. And I just change the column name. To help you to understand, I just print out the pandas data frame. You can see there's open, hello, close, volume, and others. The index is just date. If you have used the Yahoo Finance, you will feel very comfortable with this data. Then I come up, I want to add a few columns so that I can use these columns for machine learning. In this demo, the column will be very, very simple. The first column I want to add is close price from yesterday. The the action is just to shift the close column by 1, so that I can have on the same column, I will have on the same row, I will have a price of close yesterday. Then I want to add 2 columns. The first one is a close price change in percentage from yesterday to today. This formula is just close minus close yesterday and divided by close yesterday. As I mentioned, this is percentage. Then the other column is the close price change from today to tomorrow. That's the juicy part, actually. I just shift the close price from yesterday to today by 1, and then I got this one. The reason I want to add these 2 columns is that I want to build a linear regression machine learning model to see if any chance I can use yesterday's price to predict tomorrow's price. That's the juicy part. And then apply it to the HIST pandas data frame and remove NA rows, because machine learning package that I'm going to use cannot handle NA columns. And then print it out for everyone to know the data looks like. This part is still same, but with 2 extra columns here. If you see this number is positive, which means the price go up from yesterday to today. For example, this one. If it's minus, which means the price drop. This column is just shifted from this column. You can see just shifted up by 1 column. So we have this data ready to run machine learning. The next part is simple enough to run a linear regression model. You choose X, you choose Y, you choose a model, and you fit. Then I print out the model result. One is coefficient, the other one is intercept. The coefficient tells me how strong the column, the axis Y and the axis X. The bigger the absolute number of this coefficient, the stronger the correlation. And 1 is the 100% correlated. So you can see for SPY is 0.094. Looks like it's not a strong correlation at all. And negative symbol tells that there is a negative correlation here, which means if the price drop, then the price from tomorrow not very likely, but a little bit higher chance it will go up. Then I'm going to make a plot to help you to understand what I'm talking about. The x-axis is a close price change from yesterday to today, and the y-axis is close price change from today to tomorrow. So I want to predict the price. This black line is the linear regression result. I put it here to help everyone to visualize the trend. A little bit negative correlated. And the interpretation is when the price dropped yesterday and the price will go up, I won't say it's higher, a little bit higher chance the price will go up. And we found this very weak correlation. Can we make profit based on this model? I don't know. And that's what I'm going to do to find it out. This block just repeat everything, but I put it into a method so that I can use it in the next block. After I have this method, what I want to do is build a stock screener to check which stocks have a strong autocorrelation based on this method. So I put a few symbols, SPY, QQQ, Apple, Google, and Tesla, and you can add more if you want. Then I just request historical data from Yahoo Finance, run the machine learning, and put them into Python a dictionary so that you can see the result. And let's run it. Okay, yeah, just the result. If we compare these numbers, you will see SPY has the highest absolute value of coefficient and negative, which means negatively correlated with each other. However, you see some strange thing is Tesla. It's positive, even if it's very small number, it's positive. My interpretation is in the past history, Tesla has a very weak positive correlation, which means price go up, go up, go up, or either go down, go down, go down. Very slight chance based on this number. But is that what you observed in the past? Probably yes. So we can use this number to explain some of our observations here. Yeah. So if you put more tickers, then you can compare of the stocks that you are interested in to see which one has the highest correlation. And if you want, you can run other simulations, which I will demo in the next part. So just the price using the price change from yesterday to today does not satisfy my passion at all. So that I added something interesting, which is MACD indicator. MACD is pretty much just the difference between fast moving average and slow moving average. So I created this method. The input is the pandas data frame, historical data. And then I add fast moving average, quick moving average, and the difference between fast moving average and slow moving average divided by the close price, so that this MACD, pseudo MACD is normalized so that I can compare with different stocks if I want. Then the other part are pretty much same. However, this time the x-axis is the MACD instead of the other one. The y-axis is still same. So which means I want to see if I can use MACD to predict price change from today to tomorrow. And then I will make a plot to help me to visualize it. Here is the result from SPY. And you can see the correlation is very, very small. And visually, you can tell that looks like MACD based on this configuration is not a good indicator at all. However, on your spare time, you can change these numbers. For example, you can change to 5, to 60, and whatever combination you want. If you want to test other indicators, you can change pretty much just these lines and do the very similar thing to start your journey on data analysis. After that, I want to see if SPY does not have a good correlation between MACD and price change, how about other tickers? I run it like this, and then you can see, SPY is not that bad at all, it seems like, and some others, but still very weak correlation at all. So it tells me that compared to the buy low, sell high seems like it has a slightly higher chance to make profit. Then let's switch to my presentation. And I already explained the model result. After I decide to test more, then I create a trading robot so that I can backtest and live trade. The code itself is just pretty straightforward. I would like to explain it line by line because it's really short strategy. So initialize function is a function average pi will run only once at the beginning. It will be used to define some variables. For example, I use context dot security to define the securities that I want to trade, which is SPY. And then I use a schedule function to schedule a time to run the other function at a specific time. For example, here, I want to run buy low, sell high strategy every trading day at 15:59 Eastern Time, which is 1 minute before the market close. The reason for that is if I want to exactly use the close price of today, the market is closed already. I cannot trade. So that I decide to use 1 minute before the market close and use the price at that moment as if it is the close price to today's close price. Is that a good approximation? You can make a data analysis. You will find out it's pretty good approximation in long term, actually. So that's how you build trading robot. And why I chose 1 minute before the market close instead of 1 second. Of course, you can do 1 second and it will work, but think about when you place order, just 1 second for the trade to go through. And it's a little bit challenge, but so that I give myself a little margin. But feel free to change it to 30 seconds, 10 seconds, it will work. The next function is a buy low, sell high function. This is the trading decisions, and it will be executed every trading day, 1 minute before market close. The first step is to request historical data. I want the daily bar. I just need the price from yesterday, so I just want to go back 2 trading days. The return is a pandas data frame. I call it hist. You're just familiar with this name already. Then I can use machine learning model to get these numbers, but this one is so simple. So I just decide to use pandas data frame, the column of close -2, which means the one above the last row. And this price is the close price of yesterday. And the very last value of this column is the close price of today. And based on my analysis, if today's close price of today is higher than close price of yesterday, which means the price go up, I don't want to hold any position. If I have any position, I just want to sell off all position. So I use order target percentage function, and my target is 0%, which means I don't want anything. Whatever I have, either long or short, just square it off. Otherwise, which means the close price of today is lower than yesterday's close price, then I want to buy 100% of my portfolio to buy SPY. And that is the strategy, trading robots. It's very straightforward. However, there are some problems I didn't solve. For example, today is early close, and today is a holiday, then it won't work. But I just purposely remove that part to make it short, make it understandable, so that we have a trading robot. After we have a trading robot, the next step is to backtest. The backtest pretty much is to use historical data to go through your trading robot to see if there are any problems and to check if you can make profit or not. IB TD does not have historical data, so it uses historical data directly from brokers, for example, interactive brokers. And then also it can use any third-party data provider data. I will show it later. Backtest can run minute by minute if you want, and it can even go second by second if you configure it correctly. And there are multiple ways to speed up the backtesting if you want to backtest too long, actually. For more details, you can go to ibridgepad.com/tutorials for more information. Then I'm going to demo is I want to backtest it. The first demo, I call it easiest, because it's really simple to run backtest for a trading robot. First, you need to choose a strategy py file, Python file, which is I will just give it a name, and pick a start time and end time for backtesting. Also, you need to confirm which data provider you want, and then simply just run it. Let's switch to Jupyter Notebook to give you a live demo. Some import, and then choose a file name, which is demo buy low sell high.py, just a purely string. Account code. You need to give an account code if you are using Interactive Brokers as your data provider for backtesting. So this one is DU, which is starting from DU, which means it is a paper account from Interactive Broker. And the data provider name is Interactive Broker. It's just use string IB. Then I pick end time, which is data time now, and a start time. I want to go back 5 days. I choose 5 because it's short, and we can see the result almost immediately. To run this backtesting, you need to have a Interactive Broker TWS or IB gateway, which I already opened it already, and it's connected. Let's run it to see how it's going. Okay, the backtesting started, and it's going on, and that's the end. If we check quickly what's going on there, you will find out average version, file name, some pseudo money starting from 200,000. You can change it to this number if you want. Then start it. First, print out a function because I really, in my code, I just want, I didn't print out, but in this demo, I print out to let everyone know the function has been executed. And from July 12th, 5 days ago, yeah, pretty much. And then started to backtesting. However, there are some verbals tells you that you don't have historical data, and average by need the data to backtesting and recommend something. Okay, we will explain it later, but everything goes through. To visualize the result, we can run the function and use latest backtest balance log. And because there's only 2 transactions, and the result shows like this, starting from $200,000, then go up like this. This is really simple to backtest. However, we may want to change it a little bit so that it can be used for other purposes. Like, what if I want to use Interactive Brokers does not have enough historical data? What should I do? So that, as I mentioned, you can use historical data from any other third-party data providers. You can download their historical data from their server and save it into a local CSV file and use them for the backtesting. Then I switch to my third demo, which is using local historical data file. From this part to this part is pretty much same, but you need to change data provider name to local file. Give a start time, end time. This time I want to go back 50 days because using local historical data will be much faster than request data from brokers on the fly. The little bit coding part here is this part. Let me explain it. So you need to tell the backtester that which data file you want to supply to what security on which time frame. So you need to create a hist injection plan and add individual plans like this format. So for example, this part means when you want to simulate SPY and when you need Minion bar data, you should use this historical data. And whenever you want to use SPY daily bar data, you need to go through this file. Why do I need Minion bar data? Why do I need daily bar data? So daily bar data is very straightforward because in my strategy, I literally ask for historical data daily bar and go back 2 days so that you must have it ready for backtester to use. So that's very straightforward. Why do I need Minion bar data? Because backtester need to simulate the transaction at spot time, which means it's 3:59 p.m. Eastern time, and the daily bar data does not have the price on that point. So you need have a Minion bar data to tell the backtester what's the price at that moment to simulate or backtest your strategy. That's the reason you need to Minion bar data and daily bar data. If in your strategy you have some like hourly data, or let's say you want 15 minutes bar data, then you need to supply them as needed. Let's run it. This one will be pretty quick because it's just a local file, and the log is pretty clean at this moment, just a bought, sold at shares price. And to confirm you are using the local historical data, you can see this part. Data ingestion started using this one, this historical data, and it print out the first line and the last line of your historical data to make sure you double confirm that what kind of data you are using and make sure it's correct. And then backtesting stopped. Then let's check the performance. Pretty good, right? You see the price go up. It's not that straight line, but annualized Sharpe ratio is 2.56. It's not bad at all, actually. And the time period is the last year, at the end of last year. This is demo of using local historical data. Let me go back to, the next demo is a little bit different than the previous one, because when you want to test, for example, you don't want to pay Minion bar data from data provider, and the broker does not have enough Minion bar data, but you still want to have a rough idea what your trading robot looks like. Then iBridgePy help you to do that by simulate Minion bar data using daily bar data. Because think about the price at 3:59 p.m. The time is pretty much close to the market close, so that actually you can use the close price on that day to simulate 1 minute before the market close, so that in the backtester, you can just do something like this. Data source name, instead of give it a file name, you can give it a string that simulated by daily bars. In this way, we can purely use daily historical data from Yahoo Finance to backtest even back to, say, 2001. Think about what if you want to provide Minion bar data, it's just too many Minion bar data to use. So I followed this backtesting strategy and compared SPY, buy and hold SPY, and buy low, sell high strategy go back to 2001 and 2020. And I would say is a little bit better than buy and hold SPY. And to give you a quick demo in the code, what I changed compared to previous, just this line. Instead of file name, I gave a data source name. And quickly run it, you will find out the backtester starts, and there's no Minion bar anymore because I only have daily bar data there. So you can see just the daily bar there. And Backtesting stop. Let's run the performance simulation. And you can see the shape of this backtesting, if you compare to the previous one, the shape overall looks like similar, but you see there's some spikes because we provide Minion bar data and it's more accurate. But the overall shape is pretty much similar. And this is the demo about this backtest strategy. The next one, after you feel comfortable, you may think about live trade. There's no code chain at all. What you need to do, just simply switch to runme.py, or using Jupyter Notebook, there's a live trade example. It's like this. So this time, right now, the US market is open, so it's good time to make a real-time demo. But this demo is really, really simple. What I want to do is just simply print the ask price of SPY every second. So pretty much just one line, I put it into a function of handle data and run this example. Give it a file name, give it a account code, but this time it's a runme, which means live trade, either paper account or real live account, but it's not backtesting. Let's run it. And it starts. It's supposed to, okay, something hiccup. The reason for that is I have multiple kernels running at the moment. I need to clear it up so that the connection between iBridgePy and the TWS or IB gateway is not occupied at all. So this time, let me run it again. Okay, starts, as you can see. And every second, I print out the real-time price of SPY, and it just keep going. If you want to go fully automated trading, it just started like this. And let me stop and switch to my presentation. And that is the last one of my presentation. Thank you so much for your attention. And if you need help on coding, please check out our well-known Rent a Coder service. And my email is ibridgepy@gmail.com. Thank you very much. And I live in San Jose, California, which is Silicon Valley. If you happen to visit here, I would love to meet you in person. Thank you very much. Actually, I didn't see the question.
Yeah, thank you very much, Hui. That's actually was very cool to see how you dig down into the actual coding, and I really appreciate your time. We had some some questions. I'll just kind of highlight one or two. There was a huge debate here going on about speed, or whether or not Python is the best is the best platform for the best language for trading, and I think that where is the answer that I wanna highlight here. So I'd like to highlight this answer. So if you care about latency, I think that would be the same answer that I would have given, and I'm guessing that you as well. So yeah, another question was, yeah, exactly, right. So if you generally care about latency, if you're a retail trader, you're not competing with the HFTs of the world, just like in the previous talk of Nitesh mentioned that as well.
Yes, that's a very excellent presentation. Talk about if Python is sufficient or not for high frequency. For high frequency trading, definitely not. But think about even second level, Python is pretty good enough to do that.
Yeah, I agree. I agree. All right, so thank you very much. We kind of need to move things along. I really appreciate your time and your willingness to do this. And I'll see you soon, I guess.
Thank you very much.
Thank you very much.